Look at gold. It appears to be crossing over, going down one more day. Might have a weekly vertical crossover by the end of the week. This is significant. Gold crossed over on our weekly chart going up back on the week ending the 5th of October. And of course, went from a jumping in point of somewhere around 113, we'll say 114, all the way up to a high of 127.21. Now remember, GLD tracks gold at 10% of the value of the underlying commodity. So where gold is now, we saw some significant down movement. We've been waiting for several weeks to see if gold was going to cross over going down. Several of you have emailed me and commented, why would I be looking for gold to cross over going down when the stock market has been struggling to stay up and has had some significant down movement? Isn't gold where money flees? You know, folks, I can't tell you. And you can try to second guess things all you want, but that's why we don't talk about news on our program. We don't talk about following things and trying to go through earnings and all this other stuff. We look at what the charts say. There is that Wall Street saying, buy on the rumor, sell on the news. So again, the charts show us what the rumors are, and they show us the effects. So what we do is we follow the charts, and it looks like I may be sending out to all of you who are on our texting service at the close of the market on Friday, a weekly vertical crossover going down. We'll see. Could be a big up day on Friday, and this may not happen. We thought it was going to happen over the last few weeks, but we can see the derivative oscillator heating up, and the price percent oscillator appears to be in a situation of crossing over going down. So we'll get back to gold in just a minute. If you are not signed up for our texting service, it's for free. How do you do that? Look in the show notes. You'll see how to do it. You simply text the word Charting Wealth, one word, that's our name, Charting Wealth, to the number 33222 on your cell phone. Don't send us a text, as some people have done, or an email, as a lot of people have done. You send the text to the number 33222, and you send the word, one word, Charting Wealth. That's one word. Don't put a space between charting and wealth, and then you'll be on the list. But what can you do if you live in other parts of the world and not the U.S.? Hey, you can just listen to the comprehensive review and forecast. We'll tell you. We record that at the end of the market every Friday. Let's jump first into the S&P 500, as we always do. What do we see happening at the end of the week? Well, S&P 500 up for the day on Thursday, 0.38%. But what do we see going on with the weekly candle? Now, these are Heikin Ashi candlesticks, a little different than the candles you're typically used to. They are not structured high-low, open, close. It's done differently. We have a great training. In fact, 100,000+ people have listened to it. You can find it at the website, chartingwealth.com, under training. Heikin Ashi candlesticks. I'll add it at the end of today's video. But what you can see here is a red spinning top, means indecision, tending down. Now again, is the market simply saving up its energy after 2 weeks of up movement, waiting to move up again? Could be. What do we see that tells us there might be more up movement in store? Well, the price percent oscillators at least heading up, derivative oscillators losing momentum, but the price percent oscillator is about where it was in the prior week with strong up movement. So as far as the weekly, that's the feeling we get. That's our biggest wave next to the once a quarter wave that we look at, and that is important to keep in mind. We do have it charted here in purple, and it actually is in a confirmed down move, actually going into the second quarter of confirmed down moves. So we'll continue to watch and see what we see. Keep you posted, but again, remember that means downward pressure on the market. But as far as the weekly chart goes, still moving up. And you might say, well, what do all these conflicting things mean? Well, we look at all the charts all the time, keeping in mind the biggest wave is your strongest wave. And of course, that's typically the weekly. Do keep an eye on the S&P 500 is where that quarterly is. What do we see on the 2-day chart? Well, it crossed over going down back on the 2-day candle ending Friday the 22nd. We see that Yes, crossed over back on Friday. We see the Tuesday candle, pretty decent red, strong down candle. And we see the latest candle for Wednesday and Thursday of this week, a green spinning top, means indecision tending up. However, when we look at the price percent oscillator, it's moving further away from the red signal line, and the derivative oscillator is gaining momentum. So again, downward momentum. So we pay close attention to that. But we still have price movement sitting right there on the weekly trend line. So we'll keep an eye on that as to what happens. You might say, well, what do you do now? You've got the weekly going up, the 2-day going down. Our rule is, and you'll find this in our book, Charting Your Way to Wealth. You can find a link to purchase that in the show notes. As we teach, if the 2-day is going one way, that is down in this case, and the weekly is going up, you don't have a trade. We are trend followers. You have to have your two biggest trends, the weekly and the 2-day, moving in the same direction before you can look at a trade. So we're not looking at a trade right now. We're waiting for the 2-day and weekly to sort themselves out one direction or the other. Let's look at the 4-hour chart. What's it doing? It's in a down move right now. Might be heading toward a crossing over going up. Hasn't happened yet. Price movement still below that 2-day trend line, and it's riding the weekly trend line. Isn't that interesting? Do you think the weekly might be a floor? Could be, and price movement might not go below that. Things might turn around and head up. If they do, maybe they'll drag the 2-day with them and give us an opportunity to trade in an upward direction. We'll wait and see for the S&P to sort itself out. Does that make sense? Try to make as much sense of it as we can for you. Don't have a trade in the S&P right now, waiting for things to sort out. Let's go to the Qs now. The Qs, look at this. Interesting. We have for the week a red open box candle. Again, that doesn't mean that a strong red down candle, and you can see the price percent oscillator still heading up. Derivative oscillators losing some momentum. Don't have a down wick on that candle, which is a good sign. Doesn't mean it's as weak as it could be. You look at these strong, solid red down candles. Those are strong down moves. But a red open box candle is perhaps the market taking a bit of a breather. Perhaps. Price percent oscillator, as we said, is still moving up. We go to the 2-day chart and look at what's going on there. Well, we see some inherent weakness in that 2-day. Hasn't crossed over yet going down. Could bounce off the red signal line as it did before that set us up for this latest up move, which was a nice little grab for us of some good movement. But what do we see going on? Maybe the market's taking a rest and getting ready to move back up. If it bounces off the red signal line, could give us an opportunity to jump back in since the 2-day and the weekly are still in confirmed up moves. It might not. If it doesn't, what do? We follow the trend and we wait. So we'll continue to keep our eye on the prize, see just what happens. That's what's happening on the 2-day chart. Let's look at the 4-hour. Now remember, S&P or the Qs and the S&P 500 both up a little bit for the day. Q's up 0.23%. What we really see is a sideways slide. Do we have a bottom here? Somewhere around the 177.60 mark or so? Maybe. Maybe things will turn around. Price percent oscillator, however, still heading down. Derivative oscillator losing downward momentum. See what happens on Friday. And again, if we have a big bump up in the morning and a crossover going up, you might have the opportunity to jump into an up trade in the afternoon. You might not. What do? You let the charts lead you. That's what always leads us. The trend. The trend is your friend, but remember, as we were saying a few weeks ago, until the end. Now, let's keep going. Bonds up 0.35%. Looks like a great week for bonds, doesn't it? Now remember, money tends to flow into bonds when the stock market is having problems. And we've seen lots of up movement in bonds over the last 2 weeks in particular, going into the second week, now finishing it up. Price percent oscillator spiked up, derivative oscillator gaining upward momentum on that weekly chart. We go to the 2-day chart. Remember, we had it crossover back on the 2-day candle ending Wednesday, the 20th of March, and spiking up quite nicely. Look at that. Is that not beautiful? 3 candles all connected going up. That is just beautiful. What do we see going on the 4-hour chart? Now remember, we had a jumping in point on that 4-hour chart, did we not? We had it cross over going up and a jumping in point there in the afternoon and or next day for around, we would say somewhere around the 1. And again, I'm doing this on Heikin Ashi candlesticks. I always give you that predicate that it's not accurate as far as when it comes to looking at typical candlesticks. It's measured differently, but I'm trying to give them my guess estimate. I'm not going to sit here and rotate my charts over. That would take too much time. Somewhere around, we'll say, and I always try to fudge on the up end, around the 1, we'll say the 122, 122.50 mark, maybe even 123. How high have we gone? 126.69 over just, what, a 5-day period? So quite nice. Derivative oscillator is losing momentum, but that price percent oscillator is continuing to maintain its upward movement. Price movement's well above the weekly and the 2-day. Bonds have done well for us in this practice trade so far. Looking nice. Continue to keep your eye on bonds. And again, is that giving you a forewarning that the stock market is going to continue to have trouble if bonds are popping up like that? Well, we'll keep our eye on things, see what we see. Now we go back to gold. Big down day. 1.42% down in gold. What has this week turned into? A red doji, meaning lots and lots of indecision tending down. And right now, looks like we're going to have a pretty powerful crossover going down. Now, gold could pop up in the morning and could actually move this back out. We've seen over the last 3 weeks or so, some attempts to cross over going down. This is the strongest we've seen so far, so we'll continue to watch, see what happens. We saw the derivative oscillator crossover going down way back. We like for them to cross over at the same time. Typically just means a safer, better trend when the price percent oscillator and the derivative oscillator cross over at the same time. Derivative oscillator continuing to gain downward momentum. So we'll see it. Gold has been long in the tooth. And one thing we've talked about is how great our gold chart is. When our gold chart rolls over, it tends to stay over. Now we go back to the last time that it rolled over, it popped over. Then what did it do? It popped back, but we never had that derivative oscillator, or never had the derivative oscillator or the price percent oscillator pop back over, had a little bit of more movement in it. And then, of course, once we saw the price percent oscillator really start pulling away from the red signal line, the derivative oscillator gaining momentum, it just showered down, just hammered down somewhere from the area of 128, 112, no, 126, 127. I mean, all the way down to a low of 111.06. So again, lots and lots of movement down. Might be happening again. We'll keep an eye on things and let you know, but you can see how great our gold chart is. When we see those rotations over in gold, they typically go in that direction for quite a while. That's why you guys love our gold charts. Now, what's happening in the 2-day? 2-day's already been in a down move since it crossed over going down back on February the 28th. And then it went down, and this is why we don't trade on the 2-day chart. It went down for how long? 6 days. Well, 4 more days after the crossover. And then what did it do? Consequently went up. Now we see that this latest 2-day candle is a red, solid red down candle with a long wick on the bottom, little wick on top. We can see how the price percent oscillator has spiked over going down, derivative oscillator gaining downward momentum. We go to that 4-hour chart, and of course we see that it really tipped over going off the deep end starting in the afternoon of Wednesday, the 27th of March. Big down morning and followed by some more down movement in the afternoon. So again, gold down for the day on Thursday, the 28th of March, gold down 1.42%. Hey, next Wednesday is when all of our friends, our Patreon supporters, have their Q&A call in. So if you're a Patreon supporter at any level, don't forget, go ahead and start emailing us your questions, cw@chartingwealth.com. Also send us the stocks that you would like us to start putting into the system to review for you, both stocks and ETFs. And again, we want your questions. Now, if you're not a Patreon supporter, how do you become one? You go to our show notes, and you can find the show notes at, of course, chartingwealth.com, our YouTube channel, Facebook, Twitter, you name it. We've got show notes there for you. And look at those. The best place to find them is, of course, at chartingwealth.com. Every day when we post our trainings, our daily reviews, and our once-a-week weekly comprehensive review and forecast, you'll see in the show notes links to how to become a Patreon supporter. If you haven't purchased our book, by all means do so. We just got a huge new load also of traders' journals, stock traders' journals in. Those are a collection of a 3-month supply each journal of your daily market worksheet, your weekly market worksheet, and multiple trade worksheets. All spiral bound. You can mark the date you open and close it, and it becomes your trader's almanac. You will supercharge your trading with that. If you want to simply print out the PDFs that we have in the show notes, which are the trade worksheets, the daily market, weekly market, and trade worksheets, you can print those out for yourself too. If you want the spiral bound edition, you can buy them from us. And our book, Charting Your Way to Wealth, in its 8th printing. So again, we have a copy for you. We autograph them, send you off a little nice note. We so appreciate all your support. You appreciate what we do. Buy the book first. Become a Patreon supporter. If you enter at the intermediate level of Patreon support, you get a phone call from me 15 minutes once a month, along with a free book. So think about what you can do to help us out here with what we do for you. Everything else on the channel for free. If you're just starting off, let me tell you what to do. Go ahead, listen to us every day. Take notes. Follow along with your daily market worksheet. Do some practice trades with us when they become available. Practice trade. You can go on the website under trainings, and you can find all sorts of great trainings. They're all free. Just listen to 2 a week. Sit down, listen to them. They're all anywhere, a few minutes, 10 minutes, 15 minutes. Take notes, pay attention. You will learn by doing. And we're here for you. We appreciate you, appreciate all the kind comments we get constantly. And we are here because we want you to be able to learn to read stock charts. It is not rocket science. It is stock charting, but it requires practice, it requires diligence, it requires patience, it requires emotional control, and you only learn that by practicing. If any of you are listening and you are thinking about how soon you can start putting real money in the market, well, you can do that tomorrow. Chances are you're going to get screwed and lose it all. You need to practice. And remember, how do you get to Carnegie Hall? Practice. Perfect practice makes perfect. So practice with us every day. Learn this stuff. You can do it, but it does take time, energy, and effort. If everybody could do it, then of course there wouldn't be a market. So we're here to help you find your way. God bless you, my friends. All the best from the whole team here at Charting Wealth World Headquarters.